Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. So this week's topic is going to be talking about all about building a strong financial foundation for your business. We all go through ebbs and flows in our businesses, and we want to be able to withstand any major changes or maybe downturns. And so by doing that, really building a good, strong financial foundation on your business will help you to kind of weather those challenges in your business, which every single one of us runs up against. So, to the really one of the things that it's not just building a strong financial foundation just to build your business, but it's, again, as I mentioned, to keep you stable during slow, like, economic downturns or just slow seasons, right? Some of you are in parts of the country where your business might be a little bit seasonal, right? Colder months, you're not working as much, so a little bit of a downturn. And even though that's not negative in the sense, you want to be able to weather those different types of storms. It's going to help you to make decisions, good decisions, better decisions. And that's really what we talk about on here a lot, is having the right types of information and building things up to a point where you have the info you need to, in fact, make decisions off of when you don't have the best information available. In many cases, you're unfortunately left with probably the handful of not great options when it comes to decision making. So the point is that we want to see you build it up to a place where you can, in fact, have options available to you when you want to do different things. Or if something happens, for example, an economic downturn, you've got some options available to you in your business. Like anything else, building a strong foundation is going to ultimately help you to increase your profits, support you not only in the short term, but in the long term. And if you're looking to grow, not only sustain your business, but to grow your business, you really need to have a good, solid foundation in that business. And at the end of the day, also, there are many of you who are potentially looking to exit, right? So again, if you have a good, strong foundation, you're more appealing to a buyer. But in the interim, if you're not looking to sell your business, maybe you're looking to borrow money, or maybe you're looking to grow your business and you're looking for investment. And so your business looks far more attractive to a lender or to an investor, if you have a good, solid foundation that you can build on, to grow that to that place where you want it to be. And especially if you have an investor is going to want you to grow it to a point where, again, everyone can ultimately exit and get their investment back. So we talk about this a lot on here. Step one is separating your business from your personal. And what I mean is your business finances from your personal finances. I beat this drum pretty regularly on here, but you need separate bank accounts for your business and for your personal account. So when you are, in fact, paying yourself your salary, if you are a W-2 employee, it goes from your business account, it goes into a personal account, and you pay your personal bills from there. If you're in the type of business structure where you also may be eligible for distributions, or that is the only way that you're paid is through draws, that money needs to transfer from your business to your personal to pay your personal expenses. You do not want to commingle funds. It becomes more challenging to keep track of what is actually business and what is personal. And that opens up a whole other number of issues with cash flow, from a legal standpoint, maintaining the actual structure, the legal structure of your entity. You want to keep it separate so that you can maintain that separate legal structure. It helps to build credibility with your vendors and your banks, right? So when the vendors or your banks, right? Let's just say you're looking to borrow money. If they see a lot of little tiny distributions and payments out to the owner that aren't actually related to the business, again, that doesn't make you very attractive to a bank, because the bank is wondering, again, ultimately, if you're going to be able to pay them back for the money that you've borrowed from them. So again, you want to keep that separate. It also makes it a lot easier to keep track of your financial statements for overall business planning purposes, or even just for basic tax planning or tax compliance purposes. It's a lot more work for, regardless of who the person is that's doing your accounting, whether it be a firm like us or if you're doing your own internally. It's a lot harder to have to pick out personal expenses out of the financial information to make sure they don't end up on the P&L, which will ultimately skew the results of your business. So you want to keep your business accounts, your business credit cards, cash accounts, etc., separate from your personal accounts. You want to make sure you have an actual bookkeeping system set up and you are maintaining your accounting or your bookkeeping at the minimum on a monthly basis, right? So you want to be adding the revenues that you're billing out and the dollars you're collecting. And you want to be adding the expenses that you've incurred and the cash that you've paid out to pay those expenses. You want to keep track of that on a regular basis. We don't recommend, most CPAs do not recommend that you wait until year end in order to accumulate all this information, do a tax return. Again, that doesn't set you up to have a good solid foundation in your business. It is also hard for you to make decisions if you don't have this information. You want to make sure not only are you creating the proper bookkeeping system, but are you cash or accrual basis from an accounting perspective? Many of our clients, we track for business purposes and business planning purposes. We track on the accrual basis, but they might be cash basis for tax. So again, which one are you choosing? Why are you choosing it? What type of information are you getting out of it? And are you getting the right type of information so that you can in fact make good decisions? Again, use a reliable bookkeeper, accountant, CPA, along with a reliable software. Again, everybody now is in software. It's not anything really new anymore. Again, you want to make sure you're keeping it up to date. Again, if you're in the middle of the calendar year, if you're still working on your January bookkeeping in June, you probably are not making good decisions in your business because you don't actually have any information to, in fact, make decisions. When it comes to the bookkeeping or the accounting, you want to make sure you keep track of where everything is getting categorized, right? What line items are they going to in your financial statements? What income accounts, if they are in fact dollars coming in, where are they getting placed? How are the expenses getting categorized? Again, that's all part of having a good, solid, accurate set of financial statements so that, again, you can make decisions. If your expenses are ending up on all different line items, it's really hard to make budgetary decisions if your expenses are all over the place. So again, you want to have consistency, whatever that is. If you're using an outside firm like us, or you are using somebody internally, you want to make sure you keep on top of where it's getting categorized and it's getting categorized correctly. And as always, hire somebody who knows how to do bookkeeping, accounting, etc. Again, that could be somebody internally in your business. You want to make sure that person knows how to do that. And if you're utilizing an outside firm of some kind, you want to make sure that that person is experienced. And in the case of construction, it's actually very important for you to have some understanding of how construction actually works so that you can, in fact, help your client, the business owner, maintain a good set of financial statements that they can in fact make decisions off of. So there are nuances, and we've talked about that on here before, to doing accounting for construction. So you want to make sure if you are utilizing an outside service, it is beneficial to work with someone who understands the scope and understands the niche and working in that space so that you can track the things you want to track and that are helpful in that industry. We talk about this a lot on here, as well as create a budget, and you need to stick to it. We create and we help clients create forecasts and budgets at the beginning of the year. And we're looking at that on a monthly basis. Are we, in fact, staying in line with what has been budgeted? And then when we meet with our clients, we have conversations about where they are in regard to kind of budget and actual over and under on certain line items. Do we need to make revisions to that because something in the business has changed? And if it hasn't, then we're sticking with that budget. But is the client habitually going over a budget or underspending? Why? In either case, you want to know why you might be overspending or underspending. Again, it's just like when you're trying to stick to a budget at home, right? Trying to get your home finances in order. It's going to be the same thing in your business. You're going to want to build a budget and you want to try to stick to it as close as you can. Of course, making with the understanding that sometimes the budget does in fact change because your assumptions change. And so you just want to change it from that. But again, to be wildly over and under month over month when you in fact have a budgeted line item, you want to understand why that's happening, because that could ultimately affect something else you want to do later on. Again, whether it be cash flow or just overall general, business dynamics. So as always, you want to review, what you've projected your income and your expenses to be. Are you in line with what you expected them to actually be? I expected my revenues to be this month, and it actually turned out to be, Y instead of X. What's the reasoning for that? And same thing with your expenses. You want to review this at the minimum on a monthly basis. Anything longer than that, you start to get longer periods of time, and you have the opportunity or the ability at that point to be wildly out of budget on a line item. So you want to make sure you're looking at it regularly, and we recommend monthly so you can see exactly month over month if you're, overspending, underspending, that kind of a thing. And you always want to build in reserves. This is going to be crucial for any strong foundation in any business, regardless of the niche that you're in. Build a financial reserve for yourself. Start sloughing some cash away to the side, put it in, in your piggy bank, put it in, buried in the backyard, whatever works. Again, we recommend putting it into potentially in a high yield savings account somewhere. Right now, most of our clients are getting pretty high. I think a lot of clients are upwards in the 4% range for their emergency savings account. So put some money to the side, right? Make sure you are looking ahead for that slow period that will ultimately come at some point, whether it be seasonal because that's the type of business you have, or because something economically happened maybe in the region that you're in, or in the country, or whatever it is. You just want to make sure you have that money put to the side, again, to weather that rainy day. You've got that cash. So start taking a little bit, pennies on every dollar you bring in the door, and you throw it into a savings account. And again, you have your little rainy day fund for when things might get a little tough from a financial perspective. You want to make sure that you are understanding and you understand your financial reports. And you do not have to be an accountant to understand your financial reports. You just want to make sure you understand the fundamentals of what's going on in your business, right? What is going on in that profit and loss statement? What is, generating the revenues? What's pushing the revenues? What's pushing the cash flow? What's pushing the cash outflow, your expenses, and so on. You don't have to be a finance person to have a general understanding. We do recommend that most of our clients, we try to teach them as much as we can about their basic financial statements, right? Monitoring them. What are the key financial metrics we want to look at in their particular business so that they can, in fact, make good decisions? So what's happening on their balance sheet? Are they just incurring more and more receivables and the receivables not being paid down? So now it's taking longer to collect money, which will affect other things in your business. On the opposite side, are they continuing to incur expense after expense? And it's getting harder and harder to pay those vendors, and it's taking longer and longer to pay them. Those are all things that you want to make sure that you're looking at and that you understand is actually happening in your business, which ultimately comes down to your cash flow, projecting that cash flow. Where is the money ebbing and flowing? When's it coming in? What's going out? When is it going out? So on and so forth. The combination of your profit and loss, your balance sheet, and your cash flow statement, the three of those together are going to help you to make informed decisions. That really is the crux of what you need to be able to do. You don't want to be forced to have decisions made on you because you don't have the information in place, and you don't have what you need in order to make those decisions. The more information you have, the better quality of that information, the more consistently that it is maintained. Again, the better information you have the ability to make better decisions. And so I would rather see a client have multiple opportunities or multiple options from when it comes to decision making, 5 or 10, different things to choose from, versus because we didn't have the information, because, we didn't have the info or other things that come into play. Now we're almost stuck with, oh, well, these are the only two or three options available because this is what we've technically been stuck with. So I'd rather see a client have the ability to make an informed decision with far more options, and that gives them more better results in the long term. Always, when we talk about much of what we talk about here also floats all the way back down to the end of the year where we're talking about taxes, right? So now you are planning for taxes year round. What happens from a tax perspective doesn't just get, laid on your desk on March 15th when we file your business return. We're looking at it on, a quarterly basis in your business. What is going on? Again, if you are in a strong place from a foundational standpoint, you're making those plans at the beginning of the year as to what you think the year is going to look like from a tax perspective. So you're setting money aside monthly, quarterly, et cetera, to make those estimates. I would recommend making the estimates. We have some clients who don't. But again, at the least, are you putting your money to the side to be able to pay that tax bill at the end of the year that you know you're going to have, right? Because you're looking at the results of your business as you move through the year. So you have a strong financial foundation when you actually know what your profit is at that point in your business and what you think your tax liability is going to be at year end. There's no surprise when that return is actually processed and handed over to you. You're not surprised with the results because you've known what they are, or you have a general gauge of what you think they're going to be at the close of the year. As always, we recommend that you work with a tax professional, whether that be a CPA or an EA, who can help you to not only develop your estimates, but understand where your tax obligation may be, where there might be savings, and so on. So you're doing planning, right? Like anything else, your tax planning becomes part of your overall business planning, right? So build your business credit. This is important as well because at some point you're probably going to need that credit in order to grow your business. So maintain good, solid relationships with your vendors. That means paying on time. Or if you can't pay on time, reaching out to them and working out some sort of payment arrangement. Having good communication with your vendors, right? If you need to borrow money when times are good, when you actually don't need it. You go to the bank and you apply for that line of credit. When things are going really well in your business, you don't need it and it sits there for months on end because you've got the cash flow. You do not want to go to the bank to attempt to borrow money when things have kind of turned a little bit and you're running into a challenge in your business. So again, you may have a line of credit that sits there that you almost never use, but if you need it, you have it, and you can, in fact, potentially grow your business by utilizing a line of credit for a short period while you're trying to get from point A to point B to kind of make that next step in your business growth. And make sure that you're really thinking about, if you are trying to grow, that you're reinvesting in your business. Reinvest in it where it makes sense from a really strategic standpoint. It's not just, oh, well, we're constantly putting money back into the business. Well, but what is that money being put back in for, right? Is there a strategic reason for the money going back in, or is it just going back in because you actually have a cash flow problem? So if any of you have any questions, we always love to hear from you. So drop them in the chat. We'll get back to you when we can. I look forward to seeing you here every week. As always, have a wonderful weekend, and we'll see you back here next week.